Urs, welcome back. Excited for this episode of the Swiss View. We're going to be talking about a lot of things, one of them being the EU digital currency. Before we get into that, I think even more importantly that we should really talk about is the jobless claims in the US and how they've been revised. Could you give your kind of opinion? I mean, it was how many jobs? I think it was 911,000 jobs that they had to kind of say that weren't created. They
Right.
repositioned the numbers essentially.
Yeah, I mean it's one of the highest numbers, if not the highest, for many decades. And so they usually calculate it from March or February to February. So it was released in March or revised by March. And 911,000 is just such a huge number, especially given that a lot of the created jobs were coming from government agencies and government-related organizations like hospitals, healthcare, whatever. And I mean, given what the new administration in the US did with the Doge, what was it?
The Doge department.
Doge department, to make the government more efficient. I mean, there were a lot of jobs that were gone, and that has also led into a more recent number, which was the jobless claims, which has increased quite significantly. So all the services, all the financial incentives you get when you don't have a job, the claims have increased quite significantly over the last couple of weeks.
Yeah, I think it's also interesting to see that even in the jobs numbers, still kind of driving the new jobs is still healthcare, hospitality, kind of these sectors that have always been heavily influenced by government spending. And so even with Doge coming through and cleaning a lot of, or some of it, it's still what is driving the new jobs that are opening up, I guess, in the US compared to the private sector, which is kind of struggling. And we talked about that a little bit last time, but that's something that I find incredible when you have such a huge revision of the job numbers. Okay, there was things back and forth, but I mean, nearly 1 million jobs is a lot. That's a lot of jobs. Even in a big country, that's a lot of jobs. And to then still be driving the economy or the new job openings in government spending areas seems like it kind of defeated the purpose of Doge. But it's a very interesting time to be when you start looking at the US numbers.
Yeah, and I mean that's one of the cracks we have mentioned over and over again, where we said, look, the jobs market isn't as strong as someone might expect. But then on the other hand, what it leads to right now is it gives some justification to the Fed to lower interest rates, which is something the current president, Donald Trump, has asked the Fed to do over and over again. And so the discussion now is whether they will cut interest rates by 25 basis points or 50 basis points. And so from our perspective, what we have followed, and also, I mean, there are so many opinions out there, but where we are going is more towards 25 basis points, because from the Fed, it's quite a difficult situation, because next to the weaker job market, which justifies a rate cut, we still have inflation, which is still trending quite significantly above 2%.
Yeah.
And so they can't cut it too much because of inflation, but also because they don't want to be excused to be politically driven.
Yeah, and it's a very tough spot for the Fed, a central bank, to be in, where you have inflation nearly 1% over where you want it to be. The job market, which they always used as their reasoning for keeping rates high, is now shifting potentially. And so their dual mandate now puts them in a really tough spot of, okay, how do we manage this effectively? For 2 years, they were talking about a soft landing. And some people have said they've achieved it. Well, not really, because inflation is still there.
Right.
They didn't get rid of the inflation problem. And that's a really tough thing to claw back, because we're talking about 4 years where inflation was roughly 5.5% annualized. And now again, we're still at 3% inflation, which sure, it's 2% less, but it's still high.
Yeah, and it's not trending towards 2% anymore.
Yeah.
So before there was always a claim, okay, yeah, it is 4% still, but it's trending towards 2%. And now it gets stuck at about 3%. And the question really is whether it will stay there or whether it will even accelerate again and go up. And there is a very valid point to that argument or that fear, which are tariffs.
Yeah, and that's, I think, kind of I guess the struggle with the tariffs that I see is, similar to when we saw inflation starting to spike a couple years back, it was called transitionary. We all can now look back and say, for sure, it was not transitionary. Well, now with the tariff argument, what is the statement from the government? Oh, it's just going to be transitionary.
Right.
And that is a wild sediment to put in where you're raising the cost of goods with tariffs. Okay, if you want to do that, fine, no arguments. But there's that pressure, absolutely. And you haven't slowed spending. In fact, you've increased it. And so how is that environment? And I know there's a lot of minutia in that, but with those two major things, I don't see the trend of inflation to go down. If anything, persistent and maybe even up.
Yes, I totally agree. And I mean, what we have seen as a first reaction, a lot of companies that export goods to the US or imports into the US, in the first reaction, that have taken over these tariff costs.
Yeah.
But as we proceed, there will be more price increases coming because you can only do it for so long. And we have seen and heard from companies also out of Switzerland, and Switzerland has been hit especially hard, that many companies are not competitive anymore with these kind of tariffs. So they have to do something about that. And I have a friend who works in a company and they deliver products to the US, and he said their products have gone up in prices by 35%. And they are lucky enough that they somehow have a product that is needed by their consumers, and it's a very specialized sector they're in or industry they're in. So the consumers can afford it kind of, but it will drive prices up.
Yeah, and will they be able to afford it sustainably, I think, is the other question.
Correct.
In the long term. And I mean, we've seen it on the ground in Switzerland. We've seen it just with our postal service informing us, hey, we'll send letters to the US, but packages we're not sending anymore.
Yeah.
And so even on the ground in the US, at a government run program, essentially, at least subsidized program of the federal mailing system of Switzerland, no longer sends to the US. And I think that's, trends that we can look at of, okay, these big companies, your friend's company, they're at the size where they can kind of adjust to it, raise the prices. Big companies can shift their manufacturing. The trend of manufacturing, of offshoring for 3 decades might be coming to an end. We might see regional shoring. So having multiple, outputs of your company, whether it's North America and one in Europe and one in Asia, and really segmenting that. So that might be a trend that we see to try to deal with this. But the small companies are absolutely devastated,
right,
if not out of business, because of the challenges.
Yeah, and the medium-sized companies, especially out of Switzerland, they're tending more to shift production towards Europe rather than the US, because with Europe it's closer, you get better tariffs. And with the US, what we have seen, and there were cases where companies invested money and sent over workers because they needed the expertise, the know-how being in the US, but there were no visas available for these workers that would fit their situation, so they were sent back. And so one of the biggest challenge for companies is always insecurity. And obviously you always have to live within a certain amount of insecurity. And that's what makes Switzerland so strong, that they are able to do that. But there is just a level where you say, okay, under no circumstances almost, I'm going to move into this jurisdiction at that point, even though the costs are high, because you don't even know for how long it holds on. Now we had the newest outcomes that the US wants to put tariffs on China of 100%, but under some conditions, if NATO joins them with some sanctions and so on. And so there is still a lot of things that are moving, which just bear insecurity.
Yeah, absolutely. And I mean, that's, I think, one of the reasons we see the US market moving the way it is, even though it's very high
Right.
and it's not coming back as maybe some insecurity, but there's also a reason that's kind of not moving up either. Because as you said, like anything that is unsure makes everyone nervous and makes moving, it kind of paralyzes companies to a certain extent. Not all, not every situation, but it can absolutely have kind of those effects. But on the ground of Switzerland, we had the economic sentiment indicator come out
Right.
for Switzerland. So maybe you could talk a little bit, like, how are the people in Switzerland feeling this whole tariff situation, like personally? What are they kind of indicating?
So for the first response was shock, and so you also saw it with the economic sentiment indicator in Switzerland, which dropped by 5 points from about 92 to 87. And but now after the shock, they have to see how they reposition, and that was what I just mentioned before, that they are looking for alternatives, where to move, what to do with the productions, how they can move somehow around the tariffs. And there is the other situation where a court in the US said that the tariffs are illegal or unlawful, so that is someone they have to see how they navigate with that. But all of that insecurity and pressure on Swiss mid-size and small-size companies also has an effect on the Swiss National Bank. So not only the Fed in the US has a challenge with their decision next week, but the week after there will be the Swiss National Bank making a decision on their interest rates. And as probably a lot of our listeners already know, the Swiss National Bank has their interest rates at 0% already. So the question really is whether they go to negative. Our perspective is that they are going to try to prevent it as long as they can and work with other instruments. But if this kind of insecurity stays and the Swiss franc strengthens further and further, at some point there's probably no way around it. And we see how the US dollar, even after the first half of the year, has weakened quite a lot. It's not regaining any strength at the moment.
Yeah, and it was interesting to see today. Actually, I was looking at just money market calls in Swiss francs, which is funny to look at because it's zero across the boards, but at 9 months it actually is negative 0.1.
Right.
And so it kind of, for me, is an indicator of like, that, hey, look, we're not sure where the future is, but it is potentially a negative interest rate based on how everything is playing out. I mean, if you look at Switzerland with zero interest rates, zero inflation, even slight deflation in a few areas, the economy, I mean, has tariffs affected in it. The economy, they just revised, I think the GDP numbers, we were talking about this before, they revised it down to 0.9%,
right,
which could be worrisome. Some people, if I was in the US and I heard 0.9% on growth, you'd be worried. But 0% inflation and 0.9%, roughly a percent of real growth in the year. And you brought up the fascinating point of where the US stands.
Yeah, I mean, the US shows much higher growth, about 3%, which is expected for 2025. So if you compare that to the 0.9% in Switzerland, you would say, okay, Switzerland is not growing at all. And so it's very bad situation. But then on the other hand, the inflation, which you mentioned, is in the US, as we said, it's still about 2.5 to 3%. So real growth is not much higher in the US than in Switzerland, if at all.
Yeah, it's less. I would say even if it's 2.5, I mean, you look at core inflation, that's almost 3% or 3.1% in the US. Regular inflation is between 2.7, 2.9. So at best, the US is growing at 0.2, 0.3.
Yeah.
And so that's their real growth. So how much, and is it worth the price of the excess debt levels to show a growing percentage at 3% to continuing to flood the system with money that has cracks in it? Is it worth it? And I think that's kind of what we're seeing played out, and the challenges that are in the markets versus conservative approach to growth versus let's be more aggressive to growth from a government standpoint. And I think for me as an American, grew up in America, for me, I'd much rather be in a position like Switzerland than in a position like the U.S. with their debt levels just extending through the roof. And it seems like that's the only way they're going to continue to manage the economy.
Right.
So I think what we should talk about, kind of a little bit of an interesting trending topic, digital currencies. There's been a lot on social media news about the digital euro,
Right.
that it's rolling out on October 1st. And I think we should bring some context to what is actually happening with the digital euro.
So in Europe, the discussion about the central bank digital currency has been around for quite some time. We also did a podcast a couple of years back about that topic, and then it calmed down. There was a pilot project going on between 2023, I think, and 2025, which has come to an end at the beginning of this year. And so now the results are coming out, and there will be a new discussion about this digital euro, which will take place in October. So that doesn't mean that there will be a digital euro implemented right now, but frankly speaking, there is some pressure for a digital euro, and it pretty much comes from the US regulation and the Genius Act, where the US is pushing for this US dollar stable coin. And so some of European Union representatives are worried that we are lagging behind once again with a digital currency, and so they're pushing for this currency to come into effect. So there is even the discussion right now to have the digital euro on a public chain, which was not an option before, but just to push that project. Honestly speaking, with the European Union and all its members, and where it has to go through, and everyone has to kind of agree, I don't think that it will be something that happens today or tomorrow, but it is something worth following closely and to position accordingly.
Yeah, absolutely. I think with most things, following it, making sure you're getting good sources of information, and understanding what's happening is important. So thank you for shedding light onto it, Urs. It's been an absolute pleasure, and I look forward to doing this next time with you.